This is Bloomberg Daybreak Middle East and Africa, our top stories this morning. Asian stocks rally with China's factory activity showing continued expansion. Japanese equities climb as the market reopens after wild swings in the yen. Bloomberg learns that the International Criminal Court may take action on Israel. The US and allies are worried that could jeopardize peace talks. Samsung's quarterly profit more than quadruples, blowing past estimates as demand for AI and memory chips recovers. Plus, we speak exclusively to the CEO of Aldar Properties after first quarter earnings beat expectations. Well, it's just gone 8 a.m. across the Emirates. I'm Vonnie Quinn in Dubai, and let's see how we are shaping up midweek as we await the FOMC meeting. We are seeing futures pointed, at least in Europe and in the United States, a little bit lower. This after sort of treading water for the indices yesterday. We had the S&P 500 up 0.3%, the Nasdaq 100 up nearly 0.4%. We won't get a rate move, obviously, but the market might get some direction from Fed Chair Jay Powell's comments. That said, we should mention that we have seen a nice earnings season so far out of the U.S. Early reporting suggesting that more than 80% of companies, that's 4 out of 5, beating expectations, on track to increase by 4.7% in total from a year ago, according to Bloomberg Intelligence. As you can see, we might be looking at a mixed open. We did have the 2-year yield drop a couple of basis points, but we're still at the 4.97 mark. And then that risk premium is coming off from Brent crude. We're at 88.40 a barrel. Discussions on a possible ceasefire in the Middle East reducing that risk premium. Do take a look at this chart, though, because the major indices had their first down month since October. Remember, we're at the end of the month now. As you can see, it's been many months since equities have seen a down month. That said, the S&P is still up 7.25% year to date. The Nasdaq is up 5.7%. And I do want to bring you some breaking news now. HSBC reporting pre-tax profit of $12.65 billion. That beats the estimate for $12.61 billion. Sees a dividend payout ratio target of 50% for 2024. That's one of the things that analysts are very much focused on, the capital returns. Also, CEO Noel Quinn, his intention to retire has been signaled. So Noel Quinn will retire. Once again, HSBC beating on pre-tax profit of $12.65 billion. The estimate was for that to be $12.61 billion. We'll bring you more details from the earnings report in just a few moments, but we do want to get back to Asia now and check in on how those markets in Asia are faring. Avril Hung is with us in Singapore. Avril.
Yeah, Vonnie, it will be interesting to see how the read-through on the Chinese economy reflects on that HSBC scorecard. But today we did get data out of the Asian giant. It was a bit of a mixed bag where the manufacturing PMIs, they came in beating expectations, but non-manufacturing was not as good as expected. So there are some concerns about this patchy recovery in China, and we're seeing the CSI 300 erasing earlier gains. The Hang Seng climb is also not terribly convincing. We're seeing the yuan weakening today as well. But in other parts of Asia, as you know, we've seen Japan markets returning. The South Korean benchmark is being supported by Samsung as its earnings surge thanks to its chip business. But by far, the big currency moves we're watching are that in the yen. Let's take a look at how it's faring today. There is a bit of stability coming back after those huge swings just a day ago, popping above 160 on dollar yen and then rapidly rebounding, raising speculation about intervention. We didn't get any confirmation from the currency chief. He says they'll disclose results at the end of next month. But for now, worth considering that these swings yesterday actually coincided with what we saw at the end of 2022. So in a way, you can kind of interpret from that we did see intervention and the likes of Bank of America saying they'll need continuous rounds of intervention to keep the yen below 155 against the greenback into the third quarter of this year. Vonnie?
Avril, thank you so much. Avril Hung there in Singapore, keeping an eye on all things Asian markets. But we will stick with the yen now for a moment. MLive strategist Mary Nicola joins us now. So, Mary, what do we know about whether and how much intervention took place?
So the fact on intervention hasn't been confirmed, and we'll need to wait for officials to confirm that. But a lot of the moves in the yen smells a lot like intervention. It looks a lot like intervention in terms of how it's swung around. Now we've seen, even with Japan returning, we've seen that the moves have been quite muted, especially with respect to yesterday. So, but now there's some headwinds for Japan, for the yen, coming through with the FOMC tomorrow, and then of course the labor market data on Friday.
And Mary, interestingly, we also got some China activity data. It looks like perhaps there might be a turnaround in the Chinese economy, and we're getting more data now that's backing that up.
So there was some positive news out of the PMIs, especially the manufacturing. So the manufacturing was in the doldrums. It was in contraction for quite some time, and now we've had 2 consecutive months of the PMI, manufacturing PMI, being in positive territory, in expansion. So that signals that things are looking better. But of course, we're going to need a little bit more data for confirmation. You know, the monthly barrage that we usually get of data into the middle of May will be better confirmation of how the economy is evolving.
Mary, thank you so much. That is Mary Nicola, MLive strategist for us there, and we appreciate your time. Let's bring in Anita Krishna-Gupta now, who joins us. She is Head of Equity Strategy at the Chief Investment Office for Wealth Management at Emirates NBD. Let's start with the FOMC, because, of course, that is one of the main items on the agenda for this week. There's lots going on this week, but we're not going to get a rate decision necessarily, or at least one that moves the rates. But what do you think Fed Chair Jay Powell will try to signal?
Good morning, Wani. And absolutely what you're saying is our thoughts too, that we're going to just wait to see what Chair Powell says. Because, yes, there's no expectation for a rate cut at this point. Our own in-house view is that we will probably see 2 rate cuts this year, starting September, maybe December. But a lot now depends on the inflation data, because we have seen, PCE numbers, core PCE especially, which was a little bit higher than expected. These are not very worrying numbers, and definitely the inflation growth trend is down. So let's just wait to see what Chair Powell says on Wednesday evening.
Do you think he'll be as sanguine as you are, or will he try to at least seem a little more hawkish?
He stayed a bit hawkish for the last couple of months whenever he's spoken, and I don't think that's going to change. And again, the economy stays strong. So that, again, is a great fillip for him to keep rates where they are at this point.
What are you putting as your base case for inflation ticking up again?
The worry about inflation is, of course, geopolitical issues and the impact on oil and commodities. So any kind of peace talks would be welcome. Any kind of, some of the channels which are the shipping channels, if they, the tension over there eases, that's good for oil prices to come down. Of course, we are also seeing that OPEC has spare capacity. They could put another 6 million barrels if they wanted to. So the important part for inflation is the commodity and oil story at this point.
So we'll have to watch that, but certainly the risk premium coming off oil for the moment anyway. So talk to us a little bit about the divergence between central banks, because this is the year we will get it. We are likely to see at least the ECB and likely the Bank of England move.
So the ECB cutting in June, I think it's almost a given, our in-house view and the market view also. Now, that's very good for the European economy, very good for European corporates. So we have seen already the tick up in European companies in expectation of that cut. Same for the Bank of England. Not as many cuts expected as from the ECB. So there's definitely a big difference between if you start from the ECB going on to the UK, going on to the US, and then Japan. Because Japan, of course, is in a phase where it's getting rid of the yield curve control, getting rid of the negative interest rates. The yen, of course, has not benefited from that as yet. Whether they try to do any kind of interference in trying to get the yen a little bit stronger, that's yet to be seen. So, yes, a big divergence.
What do you do with the equities portion of your portfolio, given that we are going to see central banks diverging and the ECB moving and the BOE moving this year, likely, very likely, before the Fed? Should you get out of US equities? You've done nicely if you've been in them.
It's very difficult for me to be not neutral US equities. We still see US equities as the area for growth. with technology results, which we have seen, whether it's Alphabet, Microsoft, they're still booming. You've got very high growth coming from the communication services sector as well as technology. Overall, the U.S. economy is also doing well. So we will probably stay neutral, the U.S., albeit we're going to see some volatility. We're looking to add at Europe. UK, we have seen hit record highs, the FTSE, based on the fact that it's an index based of a large composition of commodity and oil. So whilst we've been neutral, the UK, I think maybe it's time to add a little bit to Europe and the UK going into next month.
What about emerging markets? So developed markets, you've just laid out there your view, but emerging markets, we have seen, plenty of outperformance in some of them, but maybe it's not time to pivot away from those ones yet?
We've been neutral China for quite some time now. Now the Hang Seng has had 7 days of an up movement. What's happening in China is that the focus is on manufacturing now. So when we just heard Mary talk about the fact that manufacturing PMIs have been better, and what we are seeing and hearing from the ground is that the government is focused on the 5% GDP growth target, and they're looking at manufacturing. They're not looking so much at helping the real estate companies who are in default or in terms of other flips to the consumer, because they feel that manufacturing, and when we've seen the export numbers, now again we have seen volumes tick up in terms of exports, but not value as much. So they are looking to put that manufacturing not only domestically but out there in the world, whether it's in the form of EVs or other goods. So China market has gone up. We're still neutral. Don't know if you're going to change that, because not seeing other basic parameters. India we still like. India, a long-term strategic story. The election should be beneficial in terms of sentiment. Another way of playing China we see is Japan. So we might think that, if you're looking at Asia, Japan might be the better way to play China or even Europe.
Japan isn't done yet, is what you're saying. Does the weak yen help?
Weak yen is helping in terms of exporters, but it's not helping in terms of dollar-based returns. And eventually, most allocators look at dollar-based returns.
We have to leave it there, but thank you so much for a lovely visit and lots of context there. Anita Krishna Gupta, Emirates NBD, Head of Equity Strategy and CIO at the Wealth Management Unit. Thank you for joining. I do want to recap the HSBC earnings that we just got out a few moments ago. Beating on the top line, pre-tax profit of $12.65 billion means a beat on the bottom line as well, a beat by about $0.04 billion. Some other headlines we got: it's announced up to $3 billion of a buyback program. The dividend payout ratio target is 50% for this year. So once again, a $3 billion buyback program with a dividend ratio target of 50% for this year. And then the other big news coming out of this filing, CEO Noel Quinn has announced his intention to retire, and the board has begun a formal process to find a successor. So turnaround at HSBC, Noel Quinn will retire, and the board has begun a formal process in order to find his successor. Still ahead, we speak exclusively to Aldar Property CEO Talal Al-Dayebi about their business strategy after first quarter revenue blew away estimates. This is Bloomberg.
Of course, any regional challenges will be addressed. And up until recently, major wrinkles in the region were ironed out due to Saudi leadership, of course, with its partners.
Yeah.
And will continue to do that. So it's very important that we don't let any regional challenges disrupt our plans, but also it's very important for us, for our plans to continue in their delivery so that we can have an impact on the region and the world.
Saudi Economy and Planning Minister Faisal Ali Ibrahim there on the war in the Middle East. Well, the US and its allies concerned that the ICC may issue arrest warrants for Israeli officials, potentially jeopardizing hopes of a ceasefire agreement with Hamas. Let's bring in Bloomberg's Dana Kraish now, who joins us on set in our studio in Dubai. Dana, first to the actual ins and outs of the ceasefire process itself, the negotiations, how are they coming along? Certainly the oil market thinks they're going well.
Well, there is cautious optimism. I would say that a breakthrough might come out of the ceasefire talks that have been going on for months now. We saw Secretary of State Blinken saying that Israel had an extraordinary offer proposal, and that was very generous to Hamas, and that Hamas must take it. So they are now urging Hamas to take the offer that's on the table now. Hamas reportedly said that we will look into it and we will give you a written response today. So that's what we are waiting for, Hamas's response to the generous offer.
So we have some details. We have figures, for example, of the number of hostages that might be released and so on. But we also know that Hamas has said a complete and total permanent ceasefire or no dice. Does that still hold? Will they have to back off that demand?
Well, the hope and the ultimate goal is for a complete ceasefire, which means cessation of hostilities between the two. And that's the aim of any ceasefire agreement that's on the table. But that won't come in the first week or first few days. So any ceasefire agreement would be in phases. The first phase would be release of hostages. And then the second phase is agreeing on a few details of what Israel forces on the ground would look like out of Gaza, out of North Gaza. So these are the details that would be on the ground militarily, and Hamas is, of course, they want Israel to be or completely withdraw from Gaza, but I think that was the sticking point also on the ground from Israel's perspective.
The International Criminal Court, there is at least public concern from the United States. I'm not sure how concerned the United States is privately, but publicly it's concerned that if the ICC slaps arrest warrants or what have you on certain Israeli individuals or groups, that might jeopardize some kind of negotiation. What has one got to do with the other, and what do we know about what the ICC is planning to do?
The worry is that Israel may opt out of ceasefire talks if the ICC issues these arrest warrants. And the arrest warrants target Israeli officials and Hamas leadership. But the biggest worry, I would say, is the reported arrest warrant against Prime Minister Netanyahu. That would be quite big, and especially that the court has received a lot of global attention. So the U.S. and its allies are now, I would say, on a diplomatic push to try to convince the court not to go ahead with these arrest warrants and to say that the priority now is to get a ceasefire agreement on the table to stop the war, push in more humanitarian aid into Gaza, and, of course, start talking about post-war Gaza.
Yeah, exactly. A long process. Dana, thank you so much. That is Bloomberg's Dana Kraish here in Dubai. Plenty more still ahead. Do stay with us. This is Bloomberg Middle East and Africa. Welcome back to Bloomberg Daybreak Middle East and Africa. I'm Vonnie Quinn in Dubai. Samsung's quarterly profit topped estimates after a boom in AI demand helped reverse losses in its chips division. The turnaround comes after a brutal 2023, which saw overall operating profit plunge to a 15-year low. Senior analyst at Bloomberg Intelligence, Robert Lee, joins us now. Robert, what stood out for you in Samsung's results?
Okay, thanks, Vonnie. I think the main thing that people have been focused on, as you mentioned in your intro, is the semiconductor business, which is dominated by memory chip sales. So memory chips being DRAM and NAND flash, which go into mainstream smartphones and PCs. That returned to profit in the quarter after a prolonged period of loss. But more importantly, obviously, given the market looks ahead, their outlook through into next quarter and the rest of the year seems positive, driven by ongoing restocking within those core markets, with a little bit of icing on the cake from AI. So, you know, happy days for Samsung investors today and a positive market reaction.
Yeah, for sure. You can say that again. What about Amazon, which we get later on? What should investors look out for there?
Okay, with Amazon obviously being the world's largest e-commerce company, the focus will be on there. But given the robustness of the economy in the US, I think the risk of any negative surprise is quite limited. Also, within countries that celebrate Easter, Easter was a little bit earlier this year, so that should have given a nice bump on that side as well. So for the quarter's revenues as a whole, the expectation is they'll probably come towards the high end of their guidance. The other two areas to focus on, of course, are AWS, or Amazon Web Services, which is their core cloud business, and that's the leader within the US market. So again, we want to see that corporate demand is remaining robust. And again, what's the outlook on the AI side of that? And then finally, the ads business. Still, advertising is a major component of their revenue. But again, tying into the comments on the economies, what we saw with Alphabet last week, the expectation is that should remain quite solid. So I think the expectations going into these numbers are quite high.
So, Robert, we have seen the bulk of the major tech companies out of the US report and, some of them globally too. How much is AI really moving the needle for tech company earnings this quarter?
That is a very good question. Obviously, AI still dominates the headlines and is extremely positive for sentiment. I think we are seeing incremental progress made on the AI side. But again, the reality is, as maybe I've said before, the major tech platforms are spending tens of billions of dollars on CapEx at the moment. They're in the investment phase. Are they recouping that or generating that level of revenue at the moment? Well, nowhere near it. So although they don't split out their AI businesses separately, I would say for the internet platforms, they're loss-making at the moment, but they're making slow and steady progress on the top line. The companies that are really profiting from AI at the moment, and this will be no surprise, it's NVIDIA. And obviously those related to NVIDIA like TSMC and ARM Holdings. So it's the equipment providers or the chip providers who are really profiting. Software companies moving in the right direction, but I would say it's still quite early days there with an ongoing question mark as to their future monetization. Not that they're not monetizing, but how quickly can they monetize those substantial CapEx investments?
Yeah, exactly. Investors really rewarding those that have business plans for that. Robert, thank you so much. That is Robert Lee, Senior Analyst at Bloomberg Intelligence. Well, let's take a look at how Middle East markets fared in the Tuesday session. So we had the Tadawul, if you look at that, rising 1.1%. Remember, it had 5 days of declines, the Tadawul, so it was really erasing much of this year's gain. But now we're back up 1.1% in yesterday's session. Bank stocks leading the market higher there. Al Rajhi Bank contributed most to that gain. And it was really green across the board. If you look at the Qatar index, it was up there 0.8%. Qatar Islamic Bank contributing most to that index gain. The ADX was open again, up 0.25%. Aldar Properties actually contributing most to that index gain. Aldar was up 4.1% after blowing away earnings estimates. And we're going to be speaking with the CEO in just a few minutes, so do stay with us for that. And then Dubai's DFM also higher. I want to mention Israel was closed again. The shekel, though, trading at 374.57. It's still close to its weakest level of the year. Do stay with us. This is Bloomberg Middle East and Africa. This is Bloomberg Daybreak Middle East and Africa. Our top stories this morning. Asian stocks rally with China's factory activity showing continued expansion. Japanese equities climb as the market reopens after those wild swings in the yen. Bloomberg learns that the International Criminal Court may take action on Israel. The US and allies are worried that could jeopardize peace talks. Samsung's quarterly profit more than quadruples, blowing past estimates as demand for AI and memory chips recovers. Plus, we speak exclusively to the CEO of Aldar Properties after first quarter earnings blew away expectations. It's just gone 8:30 a.m. across the Emirates. I'm Vonnie Quinn in Dubai, and let's see how we are shaping up for the market day ahead. Of course, we're all waiting for the FOMC. It's not that we'll get any kind of rate move at this week's meeting, but we might get some comments from Fed Chair Jay Powell that would sway the market one way or the other. As for today, we're looking at a mixed open. We're reversing the move of half an hour ago, where now it looks like the S&P might open lower, and the Nasdaq 100 is pretty much undecided. This after small moves yesterday, about 1/3% for the S&P and also for the Nasdaq 100. We also had a move for yields, but just a few basis points. We're at 4.96 now on the 2-year yield. And the risk premium coming out of Brent just a little bit, down about 0.1%, 88.30 a barrel, as these peace talks or negotiations on a ceasefire might be more accurate as they continue. I do want to point to this chart, though, because we're at the end of the month, and it has been the first down month for US equity indices since all the way back in November time. That's quite the performance. But even with this down month for equities, we're still seeing the S&P 500 up 7.25% this year and the Nasdaq 100 up more than 5.5%. So all told, not a bad performance so far in 2024. And of course, 4 out of 5 companies are actually beating earnings-wise this season. So that's pretty enthusiastic as well. Let's check in now on those Asia markets. We're seeing an update pretty much across the board. April Hong is in our Singapore studio to tell us more.
Yeah, Vani, we're seeing Asia stock markets mostly in the green, although they are pairing that rally from earlier on in the session. I think the key question is whether we're going to continue getting these U.S. tech earnings that support the momentum in the region. For now, we did get some of the scorecards from these Asian companies, including Samsung, as its chip business returned to profitability for the first time since 2022, benefiting from the AI boom, and it's rising, outpacing gains in SK Hynix, its smaller rival that has an edge in high bandwidth memory. We're also seeing Samsung supplier Tokyo Electron outpacing some of the gains in other tech stocks in the region. The big gainer in the MSCI Asia Pacific today is Mitsubishi Electric, and this is thanks to the full year guidance, the forecast coming in better than some of the analysts' expectations. Let's flip the board because the other bunch of stocks that we're keeping a close eye on in the Asia Pacific are the Chinese lenders, as these mega banks show how their profits really coming under pressure. They're dropping as their margins get squeezed, as they're being called upon to dole out cheaper loans to support the Chinese economy. And this is especially notable for the likes of ICBC and China Ag Bank, because this period, first quarter, is usually a time where we see the lending surge. We didn't see that this time around. So we can see that trickling through into the stock market performance today. Of course, now we are in break in Hong Kong, Bonnie.
Exactly. We'll check in with you again in a little bit. April, thank you so much. April Hong in Singapore. HSBC looking for a new CEO then as Noel Quinn prepares to retire. In its latest set of results, the lender also announced a buyback of up to $3 billion. Let's bring in Francis Chan, banking and fintech senior analyst at Bloomberg Intelligence. I do want to talk earnings, obviously, Francis, but first, Noel Quinn retiring. How much of a surprise is it, and who might be in the running to be his replacement?
Noel Quinn has been in the position for about 4 years, and he has been setting the tone for HSBC's Asian strategy in particular. And with his stepping down, we expect the new CEO at the very least will continue this business strategy for the bank in this region. As we know, that Noel Quinn took over the position, the CEO position from John Flint in 2020. And this is really a surprise to the market, but we believe the new CEO could continue the existing strategy, which has been doing well in the region and globally.
Yeah, shares up 16% year to date, which, at least beats the British indices in general. What will the market decide was Noel Quinn's best accomplishment?
It has been a difficult time. Over the past few years, we all know about the low interest rate environment, which somehow over the past 24 months with Fed fund rates, increases to 5.25% to 5%. The interest rate environment changes globally, and so as HSBC's revenue trends, we have been seeing much more robust revenue gains for the bank, either in the region or globally in UK and some other regions. And more importantly, we see much better shareholders' return, including dividends and share buyback. And in this result, we got another set of positive news with up to 3 billion share buyback, new plan announced, and more dividends to come. So this is something I think shareholders are really thankful to what Noel Quinn has done.
So this quarter's earnings, then, we did see a beat on the bottom line, Francis, and also a $3 billion buyback program. Will it satisfy investors this quarter?
Obviously, this could be the year, if not this year, early next year, the year of Fed policy fund rate pivot. And that could lead to weakening net interest margins for the bank or for all the banks in the world, perhaps. We are watching really closely on the revenue trend. In the first quarter, we still see pretty resilient revenue trend, in particular for the net interest margins on a sequential basis. Group sequential margins better than in the fourth quarter. We need to wait and see, but higher for longer Fed fund rates would definitely benefit HSBC's banking net interest income and other revenue.
Francis, thank you so much. That is Francis Chan, our senior banking and fintech analyst at Bloomberg Intelligence. Coming up, Abu Dhabi's biggest property developer reports a blowout first quarter. We speak to the CEO of Aldar Properties. That's next. Stay with us. This is Bloomberg.
We've been working on something very unprecedented. We started delivering and we'll continue delivering. The Kingdom will deliver all of these unprecedented projects. These projects are anchored in economics, and we're seeing more investor interest in them. They will be delivering their intended scale, and we will prioritize as things go. We get feedback from the market, from the investors. We'll do whatever is best for these returns of these projects, but also for whatever is good for the economy.
Saudi Economy and Planning Minister Faisal Al Ibrahim there on Vision 2030. Moving to the UAE, Aldar Properties has reported first quarter net income surging 81% year on year. That's as Abu Dhabi's biggest property developer sees continued demand growth among overseas and expat residents. Pleased to say Talal Al Diaby is the CEO of Aldar Properties and joins us now. So congratulations on another great quarter, Talal. Talk to us about these expat communities. Who's moving in and what are you noticing in terms of who's moving out?
Thank you very much, Vonnie, and glad to be back on Bloomberg. Well, it starts at the macro level in the UAE. I mean, this is a place that for many years we've been talking about, with all of the reform that's there, is one of the most attractive places in the world to live, work, and play. And we can see that with businesses moving to the UAE, people moving their family offices, large corporates and institutions, tourism up. And it's our job to capitalize, to really understand that demand. And we have some amazing destinations. Whether it's on Yas Island with all the theme parks and entertainment venues, whether it's on Saadiyat with world-class, second-to-none cultural sites from the Louvre to the Guggenheim, the National History Museum, and so on. And we've now been upping the game, building some world-class communities, serving all segments, from the ultra-luxury with things like the Nobu Residences, where we announced a $40 million penthouse, the highest rate in Abu Dhabi, down to affordable communities, single, multi-family homes. And what we've really seen, the big re-rating moment, has been the international buyers. So we moved from 2% 5 years ago of non-resident international buyers to 40% in Q1. So Abu Dhabi and the UAE is on the map. These are real buyers who are coming and moving their families to come and live here, or find this as one of the most lucrative investments that they can make at a perfect time in the cycle.
Well, you already have serious plans for Abu Dhabi. You're ramping up work on that beachfront community and Al Fahid Island, 7,000 properties. But you have to look out several years ahead, right? Where across the UAE are you seeing growth 3 to 4 to 5 years from now?
So look, I mean, what we're seeing today is that we believe that this growth is very sustainable, and that's why we've been out replenishing our land bank with the acquisition of Fahid Island that we're going to be launching later this year, and that's a 25 billion dirham development. We announced a big partnership in Dubai, and our first launch, Haven, was a sellout. Our second product is going to go out to launch next month in May, and a third one later on this year. We launched our franchise in Ras Al Khaimah. That city as well, with all of the announcements over there on the entertainment and gaming side, has really been a very, very attractive market. And we went out there with some unique beachfront developments. But Al Dahra is also a very different company today as we expanded internationally. The Egypt franchise, which we've been getting a lot of questions about in the past, all of a sudden Egypt is now back, in the limelight post some major announcements. But we were there before. We sustained through that period. Our business remains more valuable than it was when we acquired in 2021. And we're now looking to replicate that in London with the purchase of London Square in December. And we've been on a bit of a shopping spree, acquiring 4 central London sites that we're looking to launch later this year and in 2025. So it's quite a balanced mix across single multifamily homes and across the luxury all the way down to the affordable segment, Vani.
Are you planning more expansion in Egypt? And once you have these 4 sites in London, more expansion in London?
So in Egypt, we're focusing a lot on the North Coast. That's a real hotspot. In London, we have our property development company through London Square. And we announced two partnerships, one with Carlyle in the logistics space, which is a big focus for us both in the UK and in the UAE, where we announced a $1 billion dirham program. We also launched a credit fund with Ares that's performing very well. But more importantly, back home, 2024 is going to be a big year in M&A on our investment business. So we focused a lot on the development side, but on the investment side, we're going to be ramping up our retail office. We have a big revamp of our hospitality portfolio. So what made us unique 5 years ago is we were a very diversified and well-balanced business. And as our development business really booms up, we need to make sure that we continue to invest in all of these other asset classes.
Talal, talk to us about pricing, because certainly locally, at least around the UAE, we saw an uptick, although Abu Dhabi had been lagging, say, Dubai for some time, but 6% increase according to Cushman & Wakefield. Where do you see prices headed near term in the Emirates and beyond?
So mid-single digits is a very healthy return given all of the investment that's happening. So when you look at a $6.5 billion investment program that's happening in Saadiyat, if you look at the multi-billion-dollar investment that's happening with the theme parks on Yas, if you look at the announcements in Dubai with the new airport that's going to be the largest in the world, when you have mid-single-digit returns, increases in property prices, we think that's very healthy. It's sustainable. It's going to continue. As with all property cycles, every few years, there could be a correction. So that may come in 2 or 3 years. But Abu Dhabi, Dubai, and the wider UAE for prime or affordable products remain benchmarked globally. And these are global cities, extremely attractive and extremely lucrative. So that's what people are seeing. You should compare prices in Abu Dhabi on the beautiful beaches of Saadiyat to Miami or London or Sydney or Paris. And, the quality of life that you can get, the safety and security, is second to none.
It sounds like you're planning, as everybody should be, for tail risk scenarios and potentially a correction, as you said, in 2 or 3 years. What would catalyze that, Talal?
There's lots of things that happen, and with demand and supply, you always need to try and match them. 4 or 5 years ago, people stopped investing in office space. The government came with massive catalyst programs and invested in the Abu Dhabi global markets that we acquired a few years ago. At the time, it was at 76% occupancy. It's today at 99%. All of a sudden, the office market is back in demand. Now, what happens is many people start to go and invest in this space, and sometimes you do end up with oversupply in some pockets or some subsegments. Therefore, you kind of go and get a correction. So what's very important is that you're very prudent. You have a long-term business plan. You are trying to grow in the right risk-adjusted way, and you are ready for these corrections or potential shocks in the system that do exist, whether it's COVID or whether it's geopolitics or whether it's high interest rates. But as sustainable businesses, you need to be able to weather the storm and continue to grow sustainably. And that's what we have been doing and how we benchmark our total shareholder returns for the last decade.
Talal, just briefly, the impact of the recent floods, they were pretty unmanageable for most of the population at a certain point in time this month.
So once in 75 years, it really stress tested the infrastructure, identified areas that needed to come back. Some areas took longer, but 80 to 90% of businesses and free flow was back within 24 to 48 hours. So I commend everyone that went out on site and had the patience to go out there. You see airports around the world that have disruptions every month due to strikes or due to other things. So for us to have that kind of a shock once in 75 years is a testament to the high quality that we have. But do we need to invest in some areas and be ready as we are impacted from climate change? Yes, we do. And there's a big program. And as we can see across Abu Dhabi, Dubai, and all the Northern Emirates, that investment is already underway, and infrastructure will continue to be king.
Talal, thank you so much. And once again, congratulations on another fantastic quarter. Talal Al-Diaby, the CEO of Aldar Properties there. Well, I want to bring you some more news on another bank earnings. Santander out with earnings reporting net provision for loan losses for the first quarter that beat the average analyst estimate, coming in at 3.13 billion euro. The estimate there was for 3.2 billion euro. Retail and commercial banking net income, $1.5 billion. Underlying operating income, 8.83 billion euro. That was just more than the estimate there for 8.67 billion euros. So once again, Santander and the loan loss provision is really what we are looking at, 3.1 billion euro, and that came in lower than the estimate for 3.2 billion euro. We do have an interview, by the way, with the CFO of Santander. That's coming up just after 10 a.m. Dubai time, 7 a.m. in London. Plenty more still ahead. This is Bloomberg Middle East and Africa. Welcome back to Bloomberg Daybreak Middle East and Africa. I'm Bonnie Quinn in Dubai. Let's turn now to South Africa's election, which is just a few weeks away. The spokesperson for a new political party headed by former President Jacob Zuma says the country's economy is in crisis because it is facing deindustrialization.
People didn't even know who they were going to vote for until Mkhonto we Sizwe came. So that's just the reality of what's happening in this country. Everyone and all these political parties want to focus on politicizing issues, organic issues, meat and potato issues, things that we should not be playing around with or politicking about. Mkhonto we Sizwe, as the only catalyst and the only solution in this case for the downtrodden people, focuses on civil activism. We don't look at politicism, where you have to have credentials in order for you to be a part of Mkhonto we Sizwe. And we're saying that President Zuma, by virtue of that, as a selfless leader, came out of retirement, took the risk, and he's been a president before, so he's not power hungry. But he took the risk, even the risk of his benefits in terms of him being in the National Assembly. And he's saying, I'll lead. But because he's not a power hungry president, he's saying, because of us being a civil activist movement, he's saying that we know that there's depth in South Africa, so we'll deploy people that are competent, even if we stay within the party.
What do you say, though, to people who said a lot of the deterioration within South Africa started under President Zuma? So why not see someone new, someone fresh, not just go back to the way that things were?
Well, those would be South Africans that were totally living in a different realm at the time of President Zuma's presidency, because...
but you look at the economy now.
Well, if you look at the economy now, if you look at the past 7 years, the beneficiation has dropped in the history of this country under the Cyril Ramaphosa government, and that's a fact. During President Zuma's time, we had an economy that was not based on austerity measures, and the financial model and the framework was not based on austerity measures. There was money flowing. There was more black millionaires. There was more small businesses. And by virtue of that, we had lights that were able to facilitate industrialization. What we're going through right now is deindustrialization, and that's why we have the crisis that we have. Infrastructure is dilapidating. And look at what's happening right now. For the past month, have we had load shedding? No. So it's a clear indication that it's man-made.
And Jennifer Zapasaja, who conducted the interview, joins us now from Johannesburg. Jen, what's the likelihood the MK party will succeed on voting day?
Yeah, Vonnie, we got a new Ipsos poll on Friday, which is actually showing the MK party could get just north of 8%. Also seeing eroding support for the ANC, which is the majority ruling party, of course, and that's been the big question, whether or not we're actually going to see them elected back into power. But I think the significance with the MK party, you were just hearing from the spokesperson there, is they're really putting former President Jacob Zuma out in front, despite many of the allegations that he has had in the past before. And they are, in many cases, talking talking about very significant priorities. They describe their economic priorities, as post-apartheid deconstruction, and they have a number of very radical, for many people, ideas, including the nationalization of the central bank and of commercial lenders. And also, what's been very controversial here in South Africa is the expropriation of land without compensation. And many of their priorities are very developmental. They're expecting to then focus more on capital gains and inheritance tax instead of focusing then on labor income. And so it was really fascinating to hear from the MK party. And they believe, actually, they could see more than an 8% majority come election day.
Yes. Well, Jen, we're going to be tuning in to Africa Amplified on Friday for more on South Africa's election fast approaching. Do tune in, 6:30 a.m. Johannesburg time, 8:30 Dubai.